After spending most of 2016 heading steadily higher, utilities have suddenly been pulling back over the past couple weeks. First because of the rotation out of safety stocks and into cyclicals, and they do better, of course, when the global economy is improving. And more recently because we now seem to be in the midst of a market-wide sell-off, and some of that has to do with higher interest rates. But here's the thing. As long as the Federal Reserve stays data-driven and deliberative when it comes to raising interest rates, I bet the utilities will be able to bounce back. Because these stocks with their big dividends are bond market alternatives that tend to outperform when interest rates stay low. That's one of the main reasons we own American Electric Power, AEP, for my charitable trust, which you can follow along at actionalertsplus.com. AEP owns the nation's largest power transmission network, and they've also got a giant power generation portfolio serving more than 5 million customers across 11 states. My trust started buying the stock in January, even after the recent pullback got a nice 9% gain. And let's not forget that the stock also sports a bountiful 3.5% yield. However, American Electric Power just reported yesterday, and the quarter was, to some concerns, less than stellar, with the company delivering a 2-cent earnings miss off of $1.04 basis on weaker-than-expected revenues, down 13% year-over-year. On the other hand, management did maintain their full-year guidance, which suggests that the next few quarters could be better. Now, the stock has gotten dinged, but not that much. We got to wonder, does it have more upside, or is it just a dividend play? So let's dig deeper with Nick Akins, the chairman and CEO of American Electric Power, find out more about the quarter and the company's prospects. Mr. Akins, welcome back to Mad Money.
Great to be with you again, Jim.
All right, Nick, a lot of people were confused by the quarter because you had a couple of moving parts that you typically don't have, because American Electric Power is the cleanest quarter I ever have to talk about. First, just describe what happened in terms of the weather and the impact on the numbers, and whether you think that that is anything that is, say, permanent to American Electric Power.
Yeah, so actually it went according to plan for the first quarter. We were 2 cents off, but remember our weather impact was 11 cents. We had the warmest winter that we've had in over 30 years. The 6th warmest, and then compared against the 2nd coldest winter we had ever had in 2015 in the last 30 years. So when you look at the weather impact, it was substantial, 11 cents a share. And so we're through with the winter, we're moving into summer, and it's still going according to plan, and that's why we left guidance the same, and that's why we reconfirmed our 4 to 6% earnings growth rate.
You've got a different set of charts this time when you go through things. You're talking about what certain regions of the country are doing for you. And you've got the oil regions, which I thought were strange. It was actually pretty strong. Coal regions bad. Why do we include this data in the book? What does it mean for us?
Well, it certainly means that the economy is changing dramatically. We have our Midwest territory and our South Central territory. In the Midwest, it's actually growing faster than the U.S. economy now. And as well, when you look at the South Central part, it's being heavily impacted by the job losses created by oil and gas, even though electric load for oil and gas continues to increase at 9%, which is what you mentioned earlier.
Now, I happened to sit down with Dow Chemical recently. They just reported yesterday. I know they're building new facilities to take advantage of natural gas. They're a big American Electric Power customer. Are you seeing many others doing the same thing, taking advantage of the natural gas cheapness? Now, we know that there may not be as much drilling because they don't need to because oil and gas are low, but the companies are starting to move in and take advantage of it and building in your area.
Oh, sure. Car manufacturing, leisure and hospitality, other types of manufacturing and chemical manufacturing continues to improve because they're taking advantage of lower energy prices. So that's a way for us to have the diversity of load that really makes a lot of sense.
All right, Nick, I hesitate to do it, but I got to do it. There was a ruling. I tend not to want to do these because I went over, I was talking to my staff. I said, all right, did it for 3 hours, enough. I'm just going to ask them. There was a ruling that came down about a particular part of your business, and I can't ignore it because it was the whole conference call was about it. But to me, if you could just explain why people should not have to worry about the dividend and not worry about the earnings despite this ruling, it would really give me a better sense of calm.
Yeah, absolutely. You know, we had been working on Ohio and its ability to be able to invest in long-term generation. So we offered up an arrangement which was approved by the Ohio Commission, but the Federal Energy Regulatory Commission had concerns about it because it tended to move into federal jurisdiction. So in order to avoid a federal jurisdictional dispute, made the case yesterday that AEP is moving forward to be that premium regulated utility. Our foundation is built upon transmission, distribution infrastructure, and regulated generation. So in Ohio, we're going through a strategic process associated with the unregulated generation generation, because that provides volatility, and our investors aren't interested in volatility. They really want that constant dividend and earnings growth. So we're looking at the disposition of those assets, and part of that is being brought back into play in Ohio, and that's why I said certainly we wanted to try to either re-regulate in Ohio or we would go through the strategic processes. We're going through the strategic processes regardless, but we want to make sure that we move toward an environment where we can invest safely and also invest in not only maintaining existing generation, but investing in renewables and energy resources of the future.
All right, well, last question. I just got to wrap this one issue up. There isn't anything I just heard that makes me think that I know the board has to approve it, that the greatness of the dividend stream, meaning it goes up over time, is going to be impacted by that ruling.
I don't think that's the case. We have a view of consistency across the board from an earnings growth perspective and a dividend. Our dividend policy has not changed. It's still 60 to 70% from the rate, and also we continue to really evaluate the dividend on a regular basis, and our board really wants it consistent with earnings growth, and we continue to see that earnings growth.
Well, terrific. That's exactly what we wanted to hear. Thank you so much, Nick Akins, Chairman, President, and CEO of American Electric Power. Good to see you, sir.
Thank you.
Look, if they can do this well with a weather-related incident, mainly that it was too warm, imagine you don't have to worry about this one. And that I had to go over that ruling simply because it was very hard to understand. And I want you to be apprised of everything that's going on in American Electric Power. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.